awesome. Hope you all are having a good day today. It's exciting times with the institutional adoption of Bitcoin and just how that's evolved over the last several years. I wanted to start by just giving the panel a minute or two each to just explain where they're coming from and their experience with the institutional adoption of Bitcoin. So we'll start with you.
Thanks, Matt. So Sam Roberts, I'm Investment Director at Cartwright, and we advise in the UK pension schemes, corporate pension schemes, charities, and corporates. And we advise them across a whole range of different asset classes. But what we've done over the past couple of years is add Bitcoin to the list of asset classes that our clients can invest in. So that's led to some fascinating conversations, which we'll touch on as we go, I'm sure.
Go ahead, Bradley.
Yeah, my name is Bredley Duke. I head of Europe at Bitwise. Bitwise is a digital asset manager, so we offer investment products in digital assets. We have one of the largest Bitcoin ETPs in Europe. We also, of course, in the US as well. Today, Bitwise has over 12 billion in assets. Yeah, and I came to Bitwise. I was one of the co-founders of ETC Group, which was the first centrally cleared Bitcoin ETP in Europe, and which has actually celebrated its 5th birthday yesterday. And yeah, that's my journey. But Bitwise acquired ETC Group last year in August.
Yeah, so my name is Max. I'm CEO of Debify, which is a lending platform for institutions to provide liquidity to Bitcoin-backed lending and use Bitcoin as a collateral. So we provide all necessary infrastructure for any institution out there in the world who wants to start offloading their liquidity using Bitcoin as a collateral. We do it we believe in a proper way for Bitcoiners, so it's purely non-custodial. So what we're doing, we're trying to bring institutions to the multi-sig setups, to the non-custodial setups, so they can actually not only provide liquidity, but also learn and hold the keys to the collateral. So that's our thing, and we see a huge demand for that type of services because there's a lot of liquidity, and rates for Bitcoin-backed loans are still pretty high. So for a lot of institutions, that's a really nice way how to generate yield on their fiat or stablecoin holdings.
Yeah, Matthew Mazinskis. I am a investor, researcher, and streamer, actually, so I might come at this from a little bit more esoteric angle, kind of a last-minute sub-in. But I guess two things that I've been doing in Bitcoin for about 7 years now are researching how Bitcoin is growing against central bank money, and also how Bitcoin is growing at a very fast power curve, not an exponential curve, other like traditional assets, which does have an effect on institutional investment. So as an investor, though, I have investment in some Bitcoin companies, so I'll be able to comment on that as well.
Well, pumped to have you on the panel, and I think the rise of M2 is one of the strongest cases for a large allocation to Bitcoin. For those that don't know me, I'm the CEO of a company called Strive. We're a Bitcoin treasury company, setting Bitcoin as our hurdle rate for all capital deployment. And before Strive, I was actually at CalPERS, which is the largest pension in America. For 16 years, I managed about a $70 billion portfolio of fixed income instruments. Personally went all in Bitcoin in late 2016 and was the only person there on the trade desk, so fixed income and public equities, that was a Bitcoiner, so led their research into Bitcoin. And so I think between us all, we have a very diverse view of institutional adoption of Bitcoin. And I wanted to start with you, Sam. So you actually helped lead the first Bitcoin adoption for at least a UK pension, potentially in Europe, but unknown if that's confirmed or not. But can you just walk us through that journey? How did you help a pension integrate Bitcoin within their portfolio? What did that look like?
So it started with what I mentioned a moment ago, which is, I mean, it seems quite simple, but just adding Bitcoin to the list of options available to institutional clients. And that then meant we were raising it as an option for some of our clients. Now, there's certain filters that are important to make sure it's appropriate for the right clients. I know this is probably sacrilegious here, but it's not right for every pension scheme. And the reason for that is because in the UK, we have a lot of defined benefit pension schemes, which some of them have a really short time horizon. So they might be handing over the entire scheme to an insurer, possibly within months or, 2 or 3 years. So one of the filters we applied was, what is the time horizon that that particular pension scheme is working with? And we use the rule of thumb, if it's 5 years or more, then they should be seriously considering it. So we raised it with those clients, and there was then, obviously there was a mixture of responses, as you can imagine. But then with those that were interested, and all they had to do to be interested was to be open-minded. And I think that's a vastly underestimated skill, which we could do with seeing a lot more of in the UK. But then we went through a process of training. So the what is money sort of angle is where we were coming at this from, and analysis around portfolio construction and thinking about how it's held, because they didn't want to hold, they're not going to hold private keys themselves. So there's a whole process to go through.
Yeah, and kudos to you, because coming from a pension myself, one of the largest hurdles for pension Bitcoin adoption actually is the consultant class, who will refuse to bless or adopt something that's contrarian by nature. And so you kind of get stuck in this doom loop of, we're going to allocate to fixed income, equities, private equity, infrastructure, real estate, and that's kind of it. And to say we want to allocate to Bitcoin is kind of a, oh, you want to do what? Well, look at all the other pensions. No one else is doing it. You're going to be different. And so the consulting class actually leading this is important to get the ball rolling down the hill. Maybe a question over to Bradley. When you're talking to institutions about how to adopt Bitcoin, buy Bitcoin directly, buy a Bitcoin ETP, how do you facilitate those conversations, and how do you view that?
Yeah, that's a really good question. It's an interesting one, because when we founded the company, we always had this view that ultimately the institutional investor would come. Initially, that didn't happen for many years, and of course they, by nature, a slow-moving beast, and they've got committees, the investment committees, risk committees, who are looking at all these new assets, and they're going to come over time. And we with the crypto ETPs, initially there's I think within the Bitcoin community there was a sort of a resistance to why do we need this? It's Bitcoin is perfect on its own, but actually it is helpful as another channel, as another path to investment for the institutional investor, who are looking at it through a very different lens to everybody else. So what's attractive about a Bitcoin ETP as opposed to direct investment is the fact that it's being traded through in a way that they understand and know. So on a regulated exchange, they are regulated MiFID II instruments in Europe, and 33 Act ETFs in the US. They've been approved. They can see a daily trading volume. They know that these exchanges have a bunch of regulation behind it. So the conversations we have are around the product themselves, about custody. There's always a big focus on custody, and so there should be, because ultimately that's where the assets are lying. And then the discussion will inevitably go on to portfolio composition. What is adding Bitcoin to my portfolio, 60-40 or whatever the approach, how is that going to change the outcome? What is it going to do to the Sharpe ratio? What's it going to do to drawdowns? There's always concern about that. Questions about volatility as well, because the Bitcoin vol has been coming down over time, but it's there, and it always has been a feature of. I say a feature of Bitcoin.
Yeah, I think one of your colleagues, Jeff Park, really frames this well, where he talks about how fiat money is designed to be stable in purchasing power, but by that design, it loses purchasing power almost by definition and as the mandate over time, where Bitcoin with its perfect, finite supply should be volatile because there is no mechanism to control for price stability, but you get one Bitcoin is always one Bitcoin stability, and that's something that is very comfortable for a Bitcoiner, but for an institution can be scary, except for the fact that by integrating it into a portfolio, it doesn't actually necessarily increase the volatility. You can actually increase returns for the same amount of volatility. Maybe I'll go over to you, Max, in a second, but maybe just, I know you had a lot of opinions backstage, but anyone have opinions on how to integrate it into a portfolio from an institutional perspective while managing volatility?
I mean, well, if you look at the charts, Bitcoin is not volatile comparing to other assets, that volatile on a long-term scale. And our use case is basically backing up any type of, it's kind of, for Bitcoin-backed lending in the modern era, it works like almost like treasuries. You always have this underlying collateral. All loans, or most of the loans in the space, are over-collateralized, so lender is getting his money anyway. So for us, it's this is what we're trying to bring to the lenders and to TradeFi lenders, that it's a basically win-win. It's a very safe type of investment. If you're not fine with having Bitcoin, holding Bitcoin through ETF or just in your wallet, you can always start lending against Bitcoin. And it's going to generate a good return long term, and it's actually pretty much projectable, and you can understand your cash flow in the months and years in advance. So returning to the managing volatility and actually a bit about lending is that we actually initially started this idea with in mind that we're going to put some banks on the Bitcoin standard. And we started with lending because this is what banks understand. That's the core business for any bank, lending. Actually, the modern banking started with the lending business, as we know. That was their primary thing, to provide liquidity to those who are, to the businessmen, to entrepreneurs. So for us, they can manage volatility in different ways, but in the long term, I think Bitcoin is less volatile than any equity or high-risk stocks or whatever. And it's actually proving that way for the last couple of years.
Yeah, and I can put a couple more words on that, because I think what Max is doing at Debify, and also taking into account the volatility that you mentioned, Matt, I mean, the TradFi world that we're talking about, investors want, I mean, it's 5 to 10% roughly, okay, that's exponential. But Bitcoin is doing right now on the curve 45% per year. It's going to be 42% by the end of the year. And it's a very predictable curve that even goes through all the booms, all the busts. But when you have a collateral that you can put basically aside, backing a loan, like I'm sure in your language, in Latvian and in my language, collateral is hypothetical. It's the same word as the ancient Greeks used. It used to be buildings, it used to be farm equipment. Now, Bitcoin is literally the best collateral that you can have in the history of the world. Yes, you might have a big drawdown 1 year as far as price goes, but you're not going to have the liquidity, the marketability, the securitization that's coming. It's just people that don't see that right now, they're way behind. I know I'm a bit bombastic there, but they're way behind the curve if they don't see how good collateral is, even considering the volatility that Bitcoin has.
Go ahead.
I mean, so coming at this from a portfolio construction point of view, so this particular pension scheme put in 3%. And you might think, well, that's not very much, is it? But it's, particularly being the first ones to do it, it was critically important that they could sleep at night. And that's coming at it from both directions, right? So if the price, we're assuming lots of price volatility, anyone's guess exactly how volatile it will be going into the future. So if the price falls, let's say it halves, then what we don't want is for them to panic sell. That would be a disaster scenario. So it needs to be small enough so that they can essentially ride through that volatility. Possibly, we haven't, it would need a discussion at the time, but possibly add to that allocation and top it up, take advantage of the cheaper price. But also on the upside. So they're not going to be able to sleep at night if the percentage gets above a certain level. It's going to be a very personal decision about what that level is. But if it, let's say, got to over 10% or 20% of their total assets, that's probably not a sleep at night scenario for them. So we have built in triggers to, and also they don't need that level of return. We built in triggers to essentially trim some of the profits if the price gets too high, so they can continue to sleep at night. So we've thought about it from both directions.
Yeah, and we've done some of that analysis too, where you look at an efficient frontier. So just what is the maximum amount of return you can get per given unit of risk? And just traditional TradFi portfolio theory, what we've done would allocate about 20 to 25% to Bitcoin. But then you have to look at all these other factors. What is the ability to handle the volatility of the actual asset of Bitcoin itself? What is the education level? What is the mandate? Many pensions have mandates around a 7% return hurdle, and you take an asset that has 30, 40, 50% returns, that's such a powerful thing. You actually aren't incentivized as a pension to earn 10% returns annually. You're incentivized to earn 7 and minimal volatility to earn 7. So it's just a very different mandate than other people might have. I want to dig back into the collateralization and some of the points, Max and Matthew, that you were hitting on, because I think it's a very interesting moment for a fixed income investor to look at actually getting yield through Bitcoin securities. So you obviously have Strategy that has a handful of different securities, Strike, Strive, Stride, that are all, thankfully they haven't announced Strive yet, but kind of funny. Sorry, Jack Mallers already has Strike and Strike, but those securities have very high yield-like return profiles right now, and my guess is that in Bitcoin lending, there's probably also a higher return, but yet you have a collateral that's perfect. So just kind of thinking through that as an interesting investment option for an institutional investor, what would be your pitch to someone to actually buy one of these fixed income or preferred equity solutions?
I guess every lender and every institution, they care about liquidity. And the good thing about Bitcoin as a collateral, why we say it's like a super collateral, because it's like liquidity is 24/7. So if you are providing loans using real estate, for example, and if borrower fails to repay, you are stuck with this real estate. You're going to go through courts, you're going to go through administration, whatever you're doing. With Bitcoin, it's pretty much simple. You can liquidate collateral 24/7 in seconds. So that's, I think, the most appealing thing for any institutional lender out there. They want to have highly liquid asset that they can manage, even to some level, automate the process of liquidation. And they can do it Sunday, Saturday, during the night, whatever, because Bitcoin markets are functioning 24/7. And that's very appealing for any institutional lender. They have this amazing access to highly liquid capital markets. And this is that's, I think, one of the most important parts that not many institutions understand about Bitcoin. It's highly liquid asset. I think it's the most liquid asset in the world. If you will compare working hours, doesn't have any working hours, it just trades constantly. And markets are very deep, and they're getting more and more deeper in terms of liquidity. So I think that's the main point for any institutional lender out there. And of course, we are also pushing the narrative that Bitcoiners, us, we don't want to sell Bitcoin, because we do understand there's a certain cost of opportunity. If I'm going to sell now, I might lose upward movement of like 100%. Also, I'm going to be subject to capital gain tax in many countries. So it's better to borrow. Lenders, they do understand this, and they do understand that a lot of Bitcoiners, they're happy to overpay for opportunity not to sell today in order to hold the collateral and hold Bitcoin for a longer term.
Yeah, and then I think that it's just a natural progression to move from Bitcoin as a retail investment into institutional. I want to be clear, like, withdraw your coins if you can, hold your own keys, use services that allow you to withdraw, use services that have multi-sig as collateral. There are plenty of ways to do it, but I can just give you a little anecdote of investing in the tiny Baltic countries over the past 10 years. We did investments in traditional peer-to-peer lending as well, and this is not peer-to-peer cash. This peer-to-peer lending is basically a glorified MySQL database changing loan contracts. And the amount of regulation that the regulators were trying to go through was just so cumbersome, so ridiculous. And it was a microcosm I could see firsthand that was happening in the US, that eventually everybody's like, well, this is just too complicated anyway. If you want an institutional type return, use an institutional type product. And you saw that with Lending Club and Prosper, and it's not even that exciting anymore. Lending Club's now like 90% from where it was IPO 10 years ago. The reason I say all of that is it's a natural progression to try to do something interesting with retail, but eventually, like institutional investors, they're going to want something really safe that returns really well. And I think it's just it's a natural progression that what Bitcoin is experiencing right now. And yeah, again, like I said, more big picture view there.
Any other views on, I guess, the future of securitization, lending of Bitcoin? I would make an argument that for an institution that might have a 7% return mandate, that they might be willing to give up some of the upside of Bitcoin returns for downside protection. And so part of this comes from my background of securitized products, portfolio management, where if you think about a pension, they might invest in a AAA tranche of a commercial mortgage building or residential mortgage building. And the reason that they do that oftentimes is that they don't even want the full risk of a commercial mortgage building. And you take that to Bitcoin, you say, now you have even more volatility. Well, this kind of creates this opportunity for Bitcoiners and quote unquote smart money hedge funds to get more levered return exposure to Bitcoin, and in exchange offer downside protected exposure to Bitcoin. Any views on if that will pick up in the future on the institutional side?
I mean, I think yes is the short answer. I mean, institutions are already used to structured equity type approaches where we're doing exactly what you say, but it could even be to have double the upside, and but with the up to a point, then a cap, and that cap then pays for the downside protection. So there's various different ways of doing it, and if it can be done on a ideally zero counterparty situation, then that's going to be even more attractive in terms of the options structure that's put around the underlying Bitcoin. So yeah, I can see that happening. It doesn't feel like we're there yet, but that would help. But I think particularly maybe corporates go up from the 3 to 5% to go to a higher allocation because they've just got a bit of extra comfort around that volatility.
I think with securitization in general, the institutional investor is attracted and does like the idea of ETFs and of Bitcoin or crypto ETPs, because not everybody is comfortable being their own bank. The dream is be your keys, your crypto, and being your own bank, and that's at the grassroots of the Bitcoin movement and a lot of crypto. But for a lot of these institutional investors, the way they set up their structure is that they need to follow, if there's a legal prospectus for the investment that they're investing in, it's a document that they can look at, they can analyze, they can see the way the investment is structured, and what checks and balances, what security is built into the product. So that's a natural thing for them to do now. That may change over time. As they become more sophisticated, they may decide, well, actually, we've got our head around this. We can, maybe we will go direct. And some shops do that already. At Bitwise, we recognize that transparency is important. So we do actually publish the wallet addresses, the Bitcoin wallet addresses, so people can verify. They, not trust us. They can verify that the Bitcoin that's backing the securities is actually there. And also we do allow, and this is not common, there's some products that do it, but we do allow the holders of the securities to actually have to withdraw Bitcoin, to actually say, I want my Bitcoin, here's my securities, and they can redeem directly if at a certain point they decide, actually, I want to hold Bitcoin myself. So it's just optionality that's built in, and I think it's important for certain investors.
Do you guys think, sorry, it's kind of a question myself, the people that I talk to are telling me that this cycle, it's the retail investment side is kind of dampened compared to the last cycle, and how do you foresee that changing this cycle? I mean, obviously everybody's riding the wave of the ETF boom for a year now in the US, but I'm a big believer in obviously hodling your own coins and doing everything self-sovereign that Bitcoin offers, but obviously like the big price pumps now, are they going to come from institutional investment, you think, like the majority?
I mean, from my point of view, I'd say yes. Without wanting to speculate on the price too much, but I think the wall of money coming from institutions is going to be large, but it takes longer for it to come to market because you've got a lot more governance, policy that needs to be put in place, a lot more training. You're talking to people who are looking after other people's money, not just saying, I'm going to smash buy, right? So it takes longer for those decisions to be made, and I think that's why we're seeing it being, the price action being a little bit subdued over the past few months. But who knows, later this year.
I think Bitcoin is one of the first, if not the first, assets in history that retail front-ran the institutions. Yeah. And I think that trend still continues in Bitcoin innovation. And so what I mean by that is, as you start to see some of these more esoteric Bitcoin fixed income instruments, Bitcoin treasury companies, who are the investors of those today that are driving the adoption of those? I think it's still retail. And it's retail because you go and you talk to institutions and you talk to them about some of the Stride or Strife or Bitcoin treasury companies, and they just kind of throw their hands up and oh, this is leverage, it's going to blow up. And then the next question I ask is, okay, explain to me how it blows up, because it can, but explain to me. I don't know, they have a lot of debt, and that's kind of it. And then you go to the retail community and you have these groups like MSTR True North and this really integrated retail community that's going in depth on the risks of these things on a daily basis, and they can explain it. But the institutions, for the most part, can't. And I think that's almost by design of how institutions have been designed, where, as an example, when I was at CalPERS, we would look at every corporation once a quarter. Imagine looking at strategy once a quarter and saying, okay, like what has changed? And then you look in Bloomberg at what is Bloomberg, the Bloomberg analysts estimate strategy's earnings. They don't even factor in the change in price in Bitcoin. They just look at the core operations, and so they're so far behind the game that now they're looking at adopting Bitcoin. I think that's great, but I think what's great about Bitcoin is just how far ahead retail is, and I think they're kind of the tip of the sphere, and then the big cash now is the ETFs, it's the strategy accumulation, that just the ETF accumulation and strategy is more than the Bitcoin that's being mined today.
Yeah, I think it's a really interesting point, and I think it answers the question about why is the retail investor sort of, what is it, the enthusiasm seems dampened this time, and I think it's because a lot of them are investing through strategy and other vehicles because they see an opportunity for a more levered approach, and it's quite interesting. Yeah. So back to your point about ETFs and corporate buyers, we track this, and we've seen that this year corporate buyers are 3 times the new supply of Bitcoin, and ETFs alone, US ETFs alone, are outstripping new supply. So together they over 4x the new supply. So it's absolutely getting sort of gobbled up at the source. And we see that trend accelerating, if anything. When you see the types of company like Strategy and similar companies growing, it's just going to accelerate.
So I think it's worth thinking in a bit more detail about not just sort of lumping together institutions, but actually digging into how there are subgroups within that. And if we think about companies, then they're not a blob. It all goes back to the governance point and how quickly they can make decisions. The smaller, I agree, retail are leading the charge, but smaller companies are the ones that we're seeing where they're able to make the decisions for absolutely the right reasons, but they can do it much quicker. Family firms able to make decisions much quicker. It's normally one or two people that need to be convinced, and then they just say, do it. Whereas you look at the big corporations, particularly if they hold AGMs and whatever, and we've seen some big companies, haven't we, where they've had a shareholder proposal, and it's been turned down, and just those layers of governance are too much. So they'll come eventually, but it's actually quite nice to see the little guys get there first.
Yeah, I agree. I think it is a phenomenon where in corporations, the smaller companies, generally speaking, will lead, and you've seen a handful, 10 companies that are larger companies that are going all in on a corporate Bitcoin strategy, and I'm obviously doing one of those companies, right? But I do think it's a beautiful thing that a small business could just say, hey, we want our corporate treasury to look towards the future, that if we invest in short-term treasuries, our dollars are losing purchasing power almost every single year, and looking at inflation and saying, hey, inflation actually doesn't even measure the loss in purchasing power, because a lot of this is tied to the rise of financial assets, right? And so I guess maybe, because we've got about 10 minutes left, so one question I want to ask the group is, what is the constraints for TradFi adopting Bitcoin that you're seeing on the front lines right now?
So from my point of view, ESG is still a big barrier. There's still a lot of misunderstanding about, if we just focus on, I'm sure we all want a healthy environment to live in, and how Bitcoin can be integrated with, stop wasting energy and balancing grids and all those kind of things. Is a very friendly asset. I think you mentioned earlier, you called it the ultimate ESG asset, was that right?
Yeah, so for those that don't know Strive's background, so our first mission was fighting back against ESG towards unapologetic capitalism and true financial freedom, which includes Bitcoin, but it also includes saying, nothing wrong with ESG in theory, but what is ESG? Bitcoin actually, in my view, is the #1 pro-ESG asset if ESG is first principled, not political. And the reason I say that is that, let's look at E as an example. Yes, it uses energy, but it actually provides a resource to actually take away flaring. It actually can move that into mining, which reduces emissions, right? You look at S, the ability to provide an asset that provides financial freedom. That is the most powerful thing to Bitcoin, is that you get your own keys, you have true financial freedom, but yet it's anti-ESG because all they care about is the E. The S and the G don't matter. Think about G, governance. Bitcoin is the ultimate governance asset. You compare it to any other asset out there, so it literally should be #1, but yet institutions fight back as the ESG. In my view, I don't know if you have a different take on this, but I think it's only because of E. They ignore the S, they ignore the G, and they say, well, it demands energy.
Well, and even within E, it may only be the carbon emissions that they're focusing on, so it's a very narrow way to look at the whole area. I mean, we have a lot of people in our industry that talk a lot about the importance of ESG, the environment, the social benefits, and yet here you have a solution to many of those issues that we see all around us, around the world, and yet it's dismissed because it's too volatile, which of course has got all the other, which can be managed, as we spoke about earlier. So I think that hurdle will get over, but there's still a lot of entrenched thinking, sadly.
Yeah, well, just on your ESG point, 100% agree with you on your analysis, and that's certainly always been my view. On the question of what's holding up adoption and what are the resistance. For us, it's education. It's a nascent asset class. People are scared of what they don't know, and also they don't want to look like an idiot, right, in front of an investment committee, or they want to be able to be conversant, to be able to answer questions internally. So at Bitwise, we see one of our most important roles is being an educator, providing research in a format that they can, institutions can consume or used to consuming, and actually, being there on this every step of the way in this journey, because they inevitably, as they get educated on one thing, they want to have more questions about other things, and I think. Just education is key to unlocking adoption.
Yeah, I agree with Bredley. Education, also in terms of tech, in terms of concepts of Bitcoin, holding keys. We do understand that it's a bit early for most of TradeFi companies, but it's like changing, and there's more and more tools appearing that makes it very easier and user-friendly for them to hold the keys. But also, I think general media perception also not very best for Bitcoin. When something happens like FTX or Celsius or BlockFi, and we try to distinguish, these are like shit coins, and there's a Bitcoin. They still don't understand. A lot of media coverage is like very unprofessional. I'm saying this as a person who has a first education in journalism. So, and like it's very on a very low level. They don't think a lot of like media when they write some articles. They just want to have a clickbait. Bitcoin is dying again. Something happened. Darknet money. So we're hearing a lot of that, and a lot of big TradeFi institutions. They're of course a bit scared of that. But I think we're getting there. As we're getting more and more positive news, new administration in US helping a lot in terms of public perception of Bitcoin and digital assets in general. So I think it's getting there, but it's still a long way to go.
Yeah, and I would just say from the people that I've talked to in their operations, I think if you talk about Bitcoin as a payment mechanism, like obviously it's awesome, it's the best. You can use Lightning, you can do anything you want in your own unregulated way. But as far as the world we live in, the Bitcoin companies or the crypto companies, if you want to say, I mean, they have payment regulations, they have anti-money laundering, KYC, compliance regulations, and on top of that, they have like just the regular taxes and doing business, and then they throw on this like blockchain regulation as well. So Europe in general is really trying to fight this, and they love regulating things. So I think as a payment mechanism, it's hard for everybody still. But clearly, when we're talking about securitizing, collateralizing Bitcoin as an asset, your TradFi world is giving you 5 to 10%. Bitcoin on a curve can give you 45%. It's observable. To me, that's a natural way that we're going. So that's just at least how I'm looking at the situation.
Just on the education point, it's not just about educating on what Bitcoin is. It's also about educating on the fragility of the existing fiat money system that everyone's used to. Everyone, and this is perfectly normal human behavior, but everyone thinks the next 5 minutes is going to be like the last 5 minutes. And that's not what happens when you have a fragile system. So we found we needed to try and educate on both aspects.
And maybe to close this out, so when we think about TradFi or really institutional adoption, I feel like we at least have to touch on nation-state adoption of Bitcoin, which, being in Europe, I'm an American. I'm very optimistic America with its strategic Bitcoin reserve is going to buy a lot of Bitcoin. I hope Europe does as well, but what are your thoughts on that? My view is that we are seeing the fall of fiat currencies around the globe, and you can adopt that as a nation state, and you can take a proactive view and adopt Bitcoin and buy Bitcoin, have a reserve of Bitcoin, and I think the larger the corporate company or countries go into that, the better. But just what are you seeing, and what would be your pitch to countries to adopt Bitcoin?
Well, I think the Bitcoin's, the quality that Bitcoin has of neutrality, of not being associated with any country or company or person even, is its strongest, one of its strongest attributes, especially geopolitically. We see a trend of de-dollarization happening at the moment. It's been accelerating. We see people worried about, they see the yield curves on treasuries going up the long term on the long end of the curve, and I think as countries, there's a logical step, especially with the trade policy, U.S. trade policy. People are looking to reduce their exposure to the U.S. Actually, and this is an opportunity. I think also a lot of less transparent countries will be buying on the quiet. There's definitely game theory at play here, and they will be accumulating Bitcoin, seeing the more transparent countries like the U.S. making announcements about a strategic reserve. And there is an opportunity. I think the pitch would be there is an opportunity to front run this huge buy that's going to be happening, and this continued buy of Bitcoin that's going to be happening in the future, and you can legally front run that right now.
I mean, from a UK perspective, it's essentially a complete and utter embarrassment how far behind the rest of the world we seem to be. But maybe there's some other countries which are far behind as well.
I mean, yeah, well, countries, just like institutions, they follow by example. Like 5 years ago when Michael Saylor started MicroStrategy buying Bitcoin, there was like one company his company was buying. Now we have, every day basically, there's like public traded companies announcing that they're buying Bitcoin, and there's getting more and more of them. I think with countries, it's going to be just the same, just a bit delayed. And coming from Latvia, both of us, our economy minister 2 months ago said that there's no issue with establishing Bitcoin reserve. So I think it's happening. And Latvia is like highly conservative country, and I wouldn't say we're front running anywhere near. We're not front running anyway. But even if that small country in Europe saying we should adopt Bitcoin, something definitely shifting.
Yeah, and just closing, the big countries are going to fight it. The dollar is still the best looking horse in the glue factory, even though it is just, it's fiat currency that everybody wants to try to protect. It's in a position of power, but they're not going to be able to keep up with Bitcoin. Central bank money, it grows at about 12.7% per year, central bank balance sheets in aggregate in the world. Bitcoin's growing at 45% per year. They just can't keep up with it. At some point, it's going to switch.
Mic drop. Awesome. Thanks, everyone.
Secure your BTC Prague 2026 ticket at the lowest possible price now.